All right, so now let's go over candlesticks. All right, so these are representations that you can use on your chart to analyze the price movement of the stock that you're looking at. All right, you don't have to use candlestick. There's other things you could use. You can use a line. You can use a line with markers. You can use a step line. You can use hollow candles. You can use, there's a ton of visual assets that you can put on the chart that represents the price movement of the stock. I use and I like the candlesticks, okay, because it allows me to see the price movement. It allows me to see the buyers and the sellers inside of that price, representing that time frame of that candle. Okay, so we're on the daily time frame right now, and each one of these candles represents a day price movement of the stock we're looking at, which today it's Nvidia, and what the price did that day. You can gauge a lot from a candle. Okay, it tells you about the buyers and it tells you about the sellers in that time frame that you are looking at that candle on. Okay, again, this is the daily. So now let's go over a candle. All right, we're gonna do it real time. So I have up a replay of what happened on Wednesday, January 28th with a red candlestick. Means that the price closed at the bottom. All right, any red candle, right, you want to know that the price closes at the bottom of a red candle. A green candle, the price closes at the top. So let's put that. Red candles, price opens at the top, price close at the bottom. Green candle, price open at the top, at the bottom, price close at the top. When you see the wicks, they call these wicks, the sticks at the top, sticks at the bottom, that means you had a battle between buyers and sellers. So buyers push stock prices up, sellers push stock prices down. With this candle right here, price opened at 184.92, right? So opened here in this area. Buyers pushed it all the way up to 186.09. Buyers pushed that thing up. Then sellers came back, pushed that thing all the way down, sold that thing, sold that thing, sold that thing, sold that thing, all the way down to 179.94. And buyers came back in and pushed it up just a little bit for it to close at 180. So sellers won price movement in Nvidia on Friday, March 13th. That's what this candle shows me. Okay? The wicks are important. Wicks tell you buyers was there, sellers didn't allow it to go past that level. Wicks tells you sellers was there, buyers bought back up at that level. It's wicks and bodies tell you. This candle right here is an important candle that you always want to pay attention to. Okay, these are important because they tell you buyers and sellers are equal. It tells you this is indecisive. So Wednesday, Tuesday, and Monday's push up, buying. This candle came and said, hey, buyers didn't really want to keep buying, sellers didn't really want to keep selling. It was indecisive. And sellers was unsure what to do. That's what this candle, which is called a Doji candle, and sellers was not sure they wanted to do. All right, anytime you do this, you just need to pull back a little and wait to see what happens and then go with it. All right, this and what they mean, and you need to know them. Okay, candles also can let you know, they can be your indications, right, of prices not going higher. When you see a high wick, it tells you that sellers entered, right? Entered here on this candle, which is Wednesday, and pushed it down. It didn't push it down. It pushed it down all the way to 193 from 197, but buyers bought it back up to close at 195, right? So buyers won this price on Wednesday, February 25th, right? Closing with a green body, but that wick at the top be ignored. That told sellers was absolutely there and don't want this price to go above 197. That's what it told you. And sure enough, the next day you got a heavy drop. So that is important. Okay, wicks candles are very important to understand. Okay, traders that only trade candlesticks, when they see high wicks, they go for rejects or put activity. When they see low wicks, they go for call activity, right? To only off of candlesticks. Okay, they're very, very important. When candles get together, engulfing candles like this one, this big red one engulfed this green one, so you needed to anticipate a downtrend, right? There's setups that happens with the candles as well that gives you more confirmation of what you can anticipate the price to do next. That's what it is, right? The candlesticks, chart patterns, the next video with the indicators that I'm going to teach you about, the EMAs, the MACDs, the RSIs, the indicators. All of these are just tools to help confirm to you the next possible direction stock you're looking at. That's all this is. You want to accumulate as many tools as possible that can confirm to you the next possible direction of that stock you're interested in, price. That's it. There's your cash right there. But we have the Candlestick Trading Bible inside of the community, right? The chart and then analysis trade structure in the trading grounds. Be sure to check it out. It's a 26-page PDF. It is absolutely gold. It's a gold mine. It gives you another set of tools for you to be able to use to be confident in your purchasing of the put going down or call contract stock price going up. It gives you that, okay? And that's what we want. We want as many as we can to make sure that we have that confidence, which is equal to cash for us. All right. All right.